All right, good morning, traders. Happy hump day. Let's get jumping in here for some pre-market prep. What is today? 29th. So this year is quickly coming to an end. But we'll start off here, guys, to look at the S&P 500. Monday, you get the big push here. So you get the pretty solid breakout on Monday. And at this point, I kind of expect, a bit more upside here into mid-January. So it doesn't mean it happens in a straight shot. There's going to be consolidations. There's going to be a few dips, I'm sure. But just in terms of the structure here, daily squeeze looking pretty solid. So I do think that's going to fire to the upside. And then for the Qs here, a little bit of the same. Everything's shaping up pretty good. So your S&P has hit a brand new all-time high. I would look for the QQQ here over the next handful of weeks to do very much the same thing. Moving on to the Dow here, I think the Dow will make a new all-time high. And this is all just based on these daily squeezes. So the Qs look good. The S&P looks good. The Dow looks pretty solid. Then a quick look here at the small caps. It's definitely still a little bit rough as far as momentum goes, but holding back above the 21 EMA. We talked about this on Monday. I think if the small caps can just kind of take a breather and just kind of generally trade sideways for a bit, then I think your better looking indexes like your QQQ, your S&P, I think they got some more upside here. So one spot I've been trying to bring y'all over the last couple of weeks here has been the semiconductors, right? Because all the volatility in the market, a little bit of selling pressure we sat through. Your semiconductors here, they're just printing buy signals every single day. So we look at these essentially is the first things that should lead the way when the market finally gets back into a bit of a rally mode. So at this point, it's kind of tough to suggest an entry on SMH itself. Not crazy extended, but your ideal entry is going to be back here at the 21 EMA. So I think there's a lot more to come in terms of upside here for the semis. You just want to make sure you're picking your spots wisely. So I don't think that's the best entry there. Take a look here at Micron. That's too extended. So we don't want to buy that at 3/8 AR, even if we think it's trading higher. Broadcom is just a total savage here. So in terms of the semiconductor, I think there's more upside to come. Just not the best entry at +1, +2/8 AR. So what I would point you towards here, if you are looking for the SMH to break into new highs, and you're looking for another few weeks of upside, I'd point you towards one Qualcomm. He's got such a bullish daily squeeze here, but we're trading a little bit closer to the buy zone. And I think ideally, you'd like to see a dip back down towards the 21, but I think a much better alternative than a Broadcom or a Micron trading up here at +2 to +3. So Qualcomm has a great structure. There's green 10x bars everywhere, and you got a couple of lower time frame squeezes that could make your job of trying to work an entry a little bit easier. Yeah, look at the 4-hour. Histogram starts to shift, stacked EMAs, green 10x bars. And then you got, a 60-minute squeeze. Yeah, so Micron is really solid. Generally speaking, this is still in build-up energy mode, where Micron or a Broadcom, that's very much release the energy mode. So I would point you towards Qualcomm, ideally on a dip. But then you have NVIDIA here, kind of, typically the king of the hill here for the semiconductors. It's starting to shift momentum. Daily squeeze is looking a little bit better. But the nice thing about this one is you're trading right above the 21 EMA. So I would think if the semis give you another, week to 2 weeks of momentum here, as long as NVIDIA can hold support above the 21, at some point I'd look for that to kind of join the party. So I think in terms of the semis, NVIDIA and Qualcomm, they offer pretty good entries here, a little bit closer to the buy zone, where, these bad boys like ON and Little Lamb Research kind of off to the races. So Qualcomm and NVIDIA look good as far as the semiconductors go. And then in terms of your QQQ, your XLK, XLK is kind of off to the races. The QQQ, the point I'm trying to drive home is Though you got to sit through a lot of back and forth and a lot of nasty chop, I think it's a bit easier to sit through that chop, build your position, a little bit earlier here near the 21, because when you wake up on a morning like Monday, here's your breakout. Here potentially is the beginning of your squeeze firing to the upside. Now you're not really forced with that dilemma of whether or not you chase it up here. So I think, with Monday's strength, a lot of things just quickly running away from the buy zone. So just really want to try to pick your spots wisely. So I think the Qs are going into a brand new all-time high here. But is this a spot where I think you load up on a huge position in Apple? Not up here under resistance at 2 ATR. How about Microsoft? Maybe it comes in a little bit. What I would point you towards, though, as far as the tech names go, is actually Google. Apple's already in beast mode, but I think Google here could be up next. Got a great-looking daily squeeze. There's a really clean 3-day squeeze, and there's a really, really clean weekly squeeze. So where with Apple here, the party already started. And if anything, in the short term, this might kind of be the tail end of it. Where the easy money on Apple is you're getting long back here inside that weekly 3-day daily squeeze, and then you profit into that strength, into that big push. So I think as long as Google holds the same structure here, look for something similar. So that's a bit more attractive here. Got a couple early buy signals. If you look at the histogram here, it is starting to shift. So I would kind of point towards Google right now. There's Facebook, of course, which has made a pretty good move here. Bigger picture thinking. There's no stacked DMAs. I don't know if it's ready just yet, at least not for me. Then there's Amazon. I mean, in one sense, this is kind of impressive. You have a squeeze literally on every single time frame. So from a monthly chart down to a 5-minute, you have a bunch of squeezes here. However, look at the 10x bars. They're yellow. They're neutral. So that's just like pretty much your definition of a chop fest. You're squeezing everywhere. You're consolidating everywhere. But there's not enough bullish momentum or bearish momentum to get you out of consolidation mode. So maybe you sell some credit spreads on this thing, but I think in terms of edge in the shorter term, Google's a whole lot cleaner. So there's a few spots for y'all to keep an eye on as far as trying to catch potentially another few weeks of momentum here in the semiconductors, in your QQQ, your XLK, and then I just think the market in general. Just remember, it's not going to happen in a straight shot. Right? So even a dip here to the AEMA, all completely normal. But outside of those few spots there, in terms of some good-looking setups, I think we talked about this on Monday. This year, I'm looking for way more opportunity. So, same setups, same execution, same everything, just a lot more of it. So what that means is, I love my Googles. I love to trade the Teslas. I'll trade those when they have the setup. In the meantime, something like a Ford comes popping up. I want to pay attention to that. And really, I want to pay attention to that like 2 months ago when there's a really bullish weekly 3-day squeeze setting up. But I tend to ignore this because it's not, it's not Apple. It's not Facebook, some big, sexy mega cap stock. But in terms of the squeeze, it's not about the stock. It's about the setup. So I think Ford right now, based on my scan results, it's one of the cleanest setups in the market. You got your trend, you got your momentum. Everything looks pretty sharp here. So Ford, I'd be looking for a push into 22 to 22 and a half. Right? 2 to 3 ATR here on your daily chart. So we got a little bit of that in the options room. And I think, let's see. Yeah, and you got a 4-hour squeeze as well. A lot of times that 4-hour squeeze can take you into the highs. So I think Ford is pretty sharp here. Then another one is Dollar Tree. Right? So it's not an exciting name, but it's not about the stock or the company. It's about the setup. Right? So you have trend, you have a squeeze, and you got green 10x bars almost everywhere. And you got some buy signals. So we got some Dollar Tree in my mastery, and we're looking for a push into 145, 150. Right? looking for a move here into brand new all-time highs. So that's a really nice setup. A few more here for you. Lows, I think, doesn't have the best premium, unfortunately, uh, but almost a picture-perfect setup. Right? Would like to see that histogram start to shift a bit, but in terms of bigger picture stuff here, Lowe's is really, really solid. And with that, I think comes a great setup in Home Depot. And I think in terms of trying to sell a spread, Home Depot here probably got a little bit more premium to work with, but they're equally as good looking of a setup. So you got Home Depot, you have Lowe's, right? They're not your big, mega tech, mega semis, but they're great uptrends. They have squeezes. They got a lot of green 10X bars. It's that high probability moment in time. I think for me, I got to start to care a little bit less about where it's happening and just more so focus on, okay, it's happening. Let me take advantage of it. Because when I look at some of like my scan results, let me see. Where is it? What the heck did I do with it? Right, I look at some of my scanning results now. LRCX, it's not typically something I'm going to focus on all that much. Right? But there's a buy signal. So it's just it's just as good of a setup as anything else out there. There's KLAC. So I got no freaking clue what KLAC is, but the buy signal is trying to tell me something. Right? There's XLK, there's DLR, there's HP, right? There's keys, right? And these are all just examples over the last like 5 to 10 days here. Right? There's ON Semiconductor, VeriSign. You got Tractor Supply, I think, teeing up pretty good. TYL, Domino's. Right? So I shouldn't kind of brush Domino's off when I see it on the scan results because it's about the setup, not the stock. Here you are at brand new all-time highs. Right? So just over the last handful of days here, for me, just a good example of why I got to look for my setup outside of the big FANG stocks. And I love it when you have that squeeze on an Amazon or a Google, but just in terms of consistency and is getting as many shots as possible. Well, guess what? The Domino's, the Qualcomms, the LRCXs, the KLACs. These are all good looking stuff here. All good looking stuff. So Tractor Supply is pretty solid. Got your green 10X bars. You got the momentum starting to shift on the histogram, the stacked DMAs, the squeeze. You got all the good stuff here. So those are a few for you to keep an eye on outside of your Nvidia, which I think is pretty solid here. Outside of big Google, which again I think is pretty solid. I think the Lowe's, the Home Depot, the Fords, the Dollar Trees, all pretty good looking setups there. But that's what I got for you guys. Keep it simple here. Right? With daily squeezes in the indexes, pretty much poised to fire to the upside. Just focus on the best structure possible. Right? So my mindset is, I've just got no interest in something like a Netflix right now because of the little bit of volatility in the market. It kind of crumbled here. I got no early buy signals. I got no buy signals. There's a lot of work for Netflix to do here before I'm getting these buy signals again, like back over here. So I could try to catch the bottom. Right? I could try to work a trade here, or I think I'm just going to go to something like a Ford. That's basically been picture perfect for a month and a half here. My thinking is, yeah, sure, Netflix probably bounces if the market rallies for another week to 2 weeks here. But in terms of probability, I'll take something like a Ford with a beautiful daily squeeze, all the momentum. That's where I'm going to put my risk. Then on something like in Netflix, I'll wait till the day comes around, got my setup again, and I get my signals. But if you guys get any charts I want to take a look at here, throw them over in the chat. Get the S&P futures up here. But one more thing here, right? That I think is the best swing entry, right back there to 21 EMA. But keep in mind, if we can fire a squeeze here, there could be a couple of weeks of just really good direction, right? Really good trend, really good momentum. Dial down your time frame. So I don't think you're going to get your dip back to the 21 EMA. So I think that ship has kind of sailed here. However, if you're looking for the continuation over the next week to 2 weeks, then you come into the morning, and you start looking at lower time frame squeezes. So if you look at your SPY right now, you probably have a 2-hour squeeze. You got a 2-hour, you got a 1 hour, you got a 30-minute. That offers you a little bit of edge, right? That little break in the action, that's where you can build a position and then potentially catch a continuation of the push higher. This is important though, because think in terms of options pricing. So if you come jumping in here, Tuesday morning, and you just start buying those calls, well, think about what those calls have been doing for the last 1, 2, 3, 4 days, right? They're just exploding in premium. So look at them as like potentially crazy overpriced. So you're buying them when they're like the hottest commodity going. But then when the market takes a bit of a chill pill, takes a little bit of a breather, goes into a 2-hour squeeze, it's just crushing that premium. So if the market's done nothing except trade sideways and you're down 20, 30, 40, 50% on your calls. So those calls are getting cheaper here. Now you want to come in, initiate your trade, look for the next leg higher. So a few things to keep in mind there. But the continuation trades, just dial down the time frame. 2-hour, 30-minute, 15-minute. All right, see what y'all got this morning, though. Hey, good morning, Josh. So the buyer hour was something that we're still working on over here. Still making little tweaks. We're working a few scans for it, but that's still a work in progress. So I think maybe another few months or so we should be good to go there on that. As far as being able to share more about it. Matthew, any possible today to break new high? Could we break into a new high today? Hey, keep it simple here, right? A lot of times, what's going to trigger a move on any time frame is a squeeze firing. So in this instance, you mark up your previous all-time high, which we hit yesterday. Now let's take it down, to a 2-hour chart. Is there something we can kind of sink our teeth into and work with here as far as trying to gauge that next directional move? 2-hour squeeze might be perfect. It has stacked EMAs. It has green 10X bars. It's got a positive histogram. It's above the 21 EMA. All characteristics of a squeeze, potentially ready to fire to the upside. It's a pretty safe bet. If this fires long, we're going to rip right through previous all-time highs. Maybe now you dial it down to a 30-minute squeeze and keep a closer eye on that one. If that fires long, it could trigger the 60-minute. But I think that's going to be your best compass, so to say, are those lower time frame squeezes. You watch how they develop, you watch how the momentum builds, and then if they start to fire one after the other, that should give you a pretty clean break through the highs there. Hey, good morning, Gabe. Is there a recommended account size for the mastery? So, Gabe, I would say is a general statement. You could take a vast majority of the trades we do in there with a $5,000 to $10,000 account. There's going to be things like Apple or Amazon, of course, every now and then, where max loss, per one contract might be $1,500, $2,000. But on the AMDs, the QQQs, the SPY, a lot of times our max loss is coming in at about, I'd have to say a good average is probably about $300 per contract. Is the max potential risk. So hopefully that helps you out as far as giving you a little bit of insight there. Investing, swing trading, think today could be pretty quiet. Wouldn't surprise me, actually. I prefer to see a nice big, rip here. But the final week of the year, yeah, low volume so far. It shall be a little bit, or it could be a little bit lame. Could be a little bit lame. You had SMH, sat at 249, sold it, shot up to 300. Yeah, that's always frustrating. That's always frustrating. Let's see the weekly chart. Yes, if you had it back here around 249, and I'm just mentioning this because this has really helped me in the past. Yes, if you had it back here kind of around 249, this is why I like the Keltner channels. They just give me a little bit of context, right? Where if we're holding SMH back here inside that weekly squeeze, the rule of thumb, at least for me with these squeezes, is when they fire, they should get you into about 2 to 3 ATR. So in that instance, that's 290 to 300. When we're trading back here, that always seems like such a long way away. And it kind of felt like that with Apple. We were trading a few weeks ago. We're back here at 140-ish, looking for a target of like 170. But when you measure things in terms of average true range moves, at least for me, it's a little bit helpful as far as, okay, potentially here, if the squeeze works as advertised, what is some of the potential upside? What would kind of make sense? And typically 2 to 3 ATR, it's what a good squeeze should give you. I only say this because I've done that in the past a lot. Hold a position, sit through a bunch of chop, you start to lose a little bit of patience potentially, and then when it starts to pop up, it's like, all right, perfect. I'm just gonna take my profits, get the heck out of here. And then it keeps going and keeps going, and we just sit back like, man, what the heck? Izzy, some USO. Let's see. I don't see anything here on USO, at least not for my game plan. So big focus of mine is trading, bullish weekly trends. And a big part of that for me is I need my weekly chart to have stacked DMAs and ideally green 10x bars. This has red 10x bars. Now, where I do think this could get really interesting is if it keeps chopping back and forth here between 55 and let's just call it 49-ish. If we spend another couple weeks here just back and forth, we're probably going to print a brand new weekly squeeze. Now, this is a process that could take months here, but the point being is when your weekly chop then turns into a weekly squeeze, now potentially we're working with something. We're not at first, but weeks down the road, as momentum starts to shift, as the lower time frames start to kind of clean up a little bit, then suddenly we got a structure with a little bit of edge. But until I think you get that weekly squeeze, a little bit choppy here. In the short term, pretty solid daily squeeze. I wouldn't buy it up here though. So if anything, maybe buy it on a dip to the 21 EMA. But just for me, at least in terms of trend, it was just compare this weekly chart to the weekly chart of something like an Apple. And so that's a really big part of my game plan. Even if I'm going to take some, even if my setup is going to be based off of a daily chart, even a 4-hour chart, if I'm thinking about going long, the weekly chart is the backbone. Really want that weekly chart in a really solid uptrend. I found that really helpful over the years. Hey, good morning, Cobra. Let's take a look at Tesla. In for Tesla here, guys. I don't have a setup right now, which I guess you got to. All right, here is something. This is a 30-minute squeeze. In terms of the daily chart, though, I don't have a setup here just yet. Now, you have a lot of momentum. So there's green 10x bars everywhere. It's not that daily squeeze. It's not that weekly squeeze. So I think with something like this, just dial down your time frame and keep your trades a little bit shorter. Just for the game plan I work, I don't really have that set up here just yet where I want to take, a 30, 45 day till expiration swing trade. What we could do in the interim is kind of dial it down to that 30-minute chart. And now I'm going to treat this 30-minute chart like I would treat a daily chart. I'm going to judge it based on the same criteria. Are we above the 21 EMA? Do we have a positive histogram? Are there stacked DMAs? Are there green 10x bars? So if my 30-minute squeeze has all the bullish characteristics of a bullish daily squeeze, well, then I can look to play this like I play a daily chart, looking for that move into 2 to 3/8 AR. So I think while I'm lacking my setup on the daily chart, that's what I would do for now. Is basically look for the same pitch, just on a 30-minute or 15-minute, and that can be a really solid way to catch that continuation. Henry from our options room, I believe he was hitting the 15-minute squeeze over here. Then you catch a continuation. So you don't buy the 15-minute squeeze and plan to hold it for 90 days. But that can give you a really solid push on a shorter term basis. So that's what I'm seeing there for old Tesla right now. And then in terms of Uber here, another one that's just part of my game plan. The daily chart wouldn't really make the cut, nor would the weekly chart. Yes, I wouldn't do anything here on Uber just yet. I'd wait for that weekly chart to look like that. Positive histogram, stacked DMAs, green 10x bars, above the 21 EMA. Then I think it's rip time. For now, though, it's kind of going through that process, right? It's trying to shift the histogram. So it's all kind of a step in the right direction. But notice how long it can take sometimes. You flush. We spend a few months here just trying to shift momentum, a few months trying to get back above the 21. Then we spend another few months building bullish momentum. Then you get the big time move. So for me, it's more so, okay, is there anything setting up right now that looks like Uber looked back there? And if there is, then for now, I'm going to go trade whatever that may be. And then when Uber shapes up a bit more, then I'd come looking to put some risk on the table over here. So Alex, for AMD, I think you kind of got two options, right? You wait for your dip back to the buy zone, the 8 EMA, the 21 EMA, or you got to dial it down to maybe a 30-minute chart, and maybe that serves as your entry for, well, what I would be looking for is the next leg higher. So I think the daily squeeze here is really starting to shape up nice. So I do think AMD's poised for a move back into a new high. But as far as, what's the best entry, in my book, it's back here inside the squeeze. So at this point, you wait for your dip, which I don't think you're going to get. Maybe you just jump in and say, hey, I'll structure a trade where if we do pull back, I can comfortably hold on. Or just look for your edge on a lower time frame. But I do think of pushing to the highs here. Not asking too much out of old advanced micro. All right, see, we got Activision here. Let's take a look at Activision. So the daily squeeze gave you a good push. A little bit extended at this point. And again, for me here, the weekly chart doesn't pass the test. Because when the weekly chart looks like this, I basically want to trade every daily squeeze I can get in Activision. Because your path of least resistance on a bigger picture scale, very much to the upside. All gets a little bit more difficult down here. For what it's worth, though, in the short term, I could see this getting all the way up towards, 70, 71. Reversion to the mean, right? You're down here at minus 3 ATR, so you're oversold. You get your oversold buy signal, right, with the ready aim fire, and the histogram starts to shift. So it's not necessarily my trade. However, I think in the short term, you could get your move all the way back up to your weekly 21. In the short term, that offers some pretty solid upside. Ronnie, so Microsoft, same scoop, right? At this point, you dial it down to a lower time frame, right? So try to find your edge, try to find your entry on a 30-minute chart, and there's a beauty of a 30-minute chart. Or you're waiting for your dip here, right? But I think most importantly, just don't get shaken out on a dip to the 21. So I'd say, hey, wait for it. It's the better entry. I think with the way everything is shaping up right now, I don't think you're going to get that dip. So dial it down to a 30-minute, 15-minute, work your entry based off of that time frame, but then just go into the trade and structure it in a fashion where if we do get stuffed again and we do come back to the 21, where you can comfortably sit through that move because it doesn't really change anything about the bullish structure. Just make sure you position size and structure the trade appropriately. But that's pretty much going to be the theme here. Either we get the buyable dips across the board, or it's that series of 15-minute, 30-minute, 60-minute squeezes that takes us in the next leg to the upside. Or 30-minute squeeze fire short, and now maybe you get your dip buy down here at the 21. But those are kind of, I think, the two things to look at right now. Those are the few things I look at right now. Yeah, Jason, a good question here. A good question. So, now that January is getting a little bit close as far as the monthly expiration, in terms of being able to work a better risk reward on your trades, yeah, I'd say be open minded to going out, end of January, mid February. That doesn't mean we have to hold the trade until February. It's just you might be able to work a bit of a better risk reward, giving the trade a bit more time. So what I was realizing last night, for example, because I'm trying to work a trade here on lows, where I can basically hold it for a move into a target of, 265. And I kind of want to be able to hold it until we break under the 50. Right? So kind of close it on a break under the 50 and look to take profits up here at 265. And what I was trying to do with the credit spread is structure a trade where, I'm basically risking one to make one. So up here, I'll make about $200 per contract. Down here, maybe I'll lose a little bit less. Wasn't really possible because there's only 20-ish days left until January monthly expiration. So, maybe going another few weeks out, working with a bit more premium, allows you to work the risk reward you're really looking for. Because we want to make sure we're not getting too caught up with. I'm not saying you are. I'm just kind of speaking out loud, Jason. We don't got to get too concerned with the whole max profit thing. Right? So if you can go an extra 2 weeks out to expiration, work a better risk reward. I'm talking risk down at your exit, reward up at your target. Then I think you give the trade a bit more time. Absolutely. AJ, yeah, the 195-minute chart is great. Just out of habit, I think I got the 4-hour, but yeah, that's very solid. I see one of you asking, yeah, so investing, swing trading, in terms of why the 195-minute chart, it breaks it down into equal bars. So I believe 2 195-minute bars is one full session. All right, guys, trying to get through everything we can here. Katrin, can this setup be used for day trading? Absolutely. I think the key is don't just day trade anything. So I'd say, hey, look to day trade lows right now, right? Because just kind of tune out the lower time frames. This thing's in an uptrend. Right? It's got bullish momentum on every single time frame. So find, say, a 30-minute squeeze and something with that kind of bigger picture trend and momentum. That's the kind of thing I want to day trade. Because we can go and we can find pretty looking 30-minute charts, 15-minute charts, hourly charts all over the place, but a lot of them are in pretty crappy trends. So I think you want to find your bullish 30-minute squeeze, maybe your 15-minute. You want to find that in something that from a weekly chart down to a daily is just rock solid, right? Where everything from a bigger picture perspective points towards a path of least resistance being to the upside. Those are the 30-minute squeezes that I think got the better chance of really firing off in your favor. And then I'll look for the same move, right? 2 to 3 ATR. So if you want to work a really shorter trade on a 15-minute chart, find your squeeze and take it into 2 to 3 ATR. Right? Get out, wait for the next squeeze, continue to try to rinse and repeat. And if you get something really in a trend, you can rinse and repeat that 15-minute squeeze basically until the party's over. 15-minute squeeze, take it, 15-minute squeeze, 15-minute squeeze. So, there's going to be different, we're all going to have a different preference for the exact time frame, but the same principles apply. Same principles apply. Great question. Hey, good morning, my friend. Good morning, Bill. So Roblox here. Right. And we got a position here on this sucker in the options room. It does a good job of holding support. It's just not too quick here to get anything going. It's trying to shift the histogram, trying to print a daily squeeze. It still leaves a lot to be desired, though. Now, that can change in like 2 sessions, 1 session. And what can change all of that is if we can just start to get a couple closes back above the 21 EMA. Right? Different stocks, of course, but just for some comparison here, it's like soon as AMD gets a couple closes back above the 21, now we can get something going. So I think you let it fight the good fight here at support. But I would like to see it back above the 21 EMA sooner rather than later. And if we can do that, and the histogram continues to shift, get the stacked EMAs back into the mix, get rid of the red 10x bars, then I think you're working with something again. So that could all change in a day, but that's what I would look for. If we're looking for something to get going in the short term, I think that all starts with a few solid closes back above your 21. And then that might just take you into 115. Maybe 120 and change, but got to get the closes above the mean. Got to get the closes above the mean here. That old autocorrect, it'll get you. It'll get you. Here's a really good question. Right? So Fosty, one thing I kind of dislike about how credit spreads are, like how they're taught, at least in a lot of places, is like back here, a lot of folks would say, all right, if you expect Apple to trade sideways, sell the put credit spread, try to collect some premium. I still look at the put credit spread. It is a very directional trade. Right? And that's where the squeeze really comes into play. Right? Because just think in terms of the put contracts. Right? What a lot of folks are looking for with credit spreads is, I'm going to come in here, I'm going to sell that, that 150 Apple put, and I'm just kind of looking for Apple to trade above 150 and slowly but surely get a little bit of quote unquote income coming in. That's not my thought process. My thought process is I'm going to sell the 150 puts, and now they're going to get totally just torched on that move into 2 to 3 ATR. Right? So that's the power of the squeeze when we think in terms of options pricing. When all that energy gets released, think in terms of the calls. During that consolidation, your calls are just getting slammed on premium decay. So they're nice and cheap, right? IV's really low, but then as soon as the squeeze fires and you get that really quick, bigger than expected move, well, now these calls, right, they're just getting hit with a double whammy. They're exploding because of the directional move, but they're also gaining value because of the increase in implied volatility. Now, in terms of those 150 puts, well, just imagine you bought a 150 put or you bought a 145 put, and then 5 days later, Apple's made a $20 move. Like, you already know those puts you bought, they've gotten totally creamed, right? Totally slammed. And that's what I'm looking for. So I like the little bit of edge that, hey, if Apple just kind of trades sideways here, I don't got to worry about my calls going to zero. And maybe I can still walk away with a decent paycheck. But that's the power of the squeeze. Is that move into 2 to 3 ATR? It's going to explode the calls in value, and it's going to crush those puts. So hopefully that makes sense, though. But that's where, either buying calls or selling put credit spreads, that's where that 2 to 3 ATR extension comes into play. Where whether we're buying the calls or selling the puts, we want to do it back here. Because it's the shift in the options pricing that we're trying to benefit from. So the Apple right now, for example, it's a totally different set of circumstances. The calls are already expensive, so these calls have already exploded. The put premium has pretty much already gotten kind of creamed here. It's a totally different trade at that point. So hopefully that makes sense. Great question. Great question. But all right, guys, market opens up here in 3 minutes. So I'm going to cut you loose. I wish you all the best of luck here today. For those of you over in the options room, I will see you in about an hour. I think Henry has the open, maybe Chandler. But otherwise, guys, like I had promised earlier on Monday, it's the last week of the year. So we'll do another pre-market prep tomorrow morning. Same time, same channel. And then Chandler will take you into the weekend. But I appreciate y'all. I'll talk to you soon. One last question here. If my strike price is below the 21 EMA, do I exit? Okay, really good question. And to give you the answer you deserve on that, I'm already planning to put out a video on the channel here in the next few days, kind of explaining where do you take the exit. The whole key, though, which I'll show you in the video when I put it out, is my exit is going to be a reflection of my reward on the trade. Meaning, right now in the mastery, we have some Dollar Tree. Right? And we're looking for a move into 150, so we can open up the Analyze tab and we can get a sense of, what do we stand to make it 150? Say the number is $200 per contract. Now the risk management begins with identifying, okay, where on this chart am I down about $200 per contract? Right? I want to manage my risk as a reflection of my reward. If I can only make $200 per contract on this trade, then I don't want to lose $400, $500, $600. Now the number is totally going against me here. So, the key, and it'll all make more sense when I post a video, is when I'm structuring the trade, right before I enter, I want to identify my target. I want to identify where I can say to myself, okay, this trade's pretty much a bust at this point. Like, structure has changed, we've broken down. I want to identify those two levels, right? My reward and my risk, and then structure a trade. So, a certain time till expiration, certain contracts. Then I want to manage a trade in a fashion where down here at my line in the sand, I'm going to lose less than I could make up here at my target. And I'll show you exactly what I'm talking about as far as that goes. Really good question, though. But all right, guys, I appreciate you. Have a great day. See you tomorrow morning.